The deferral is actually a nice benefit because if you have a capital gains obligation this year, you've realized capital gains, you have to pay taxes. If you invest in an opportunity zone fund, you actually don't have to recognize those gains until tax year 2026, payable in 2027.
So Michael, what's the biggest secret, best kept secret when it comes to deferring capital gains tax using opportunity zones?
Well, I'll just back up a second. I'm sure there are some people who aren't familiar with opportunity zones at all. And this was a program that was built out of the 2017 Tax Cuts and Jobs Act. And it's really a way to defer, reduce, and eliminate capital gains taxes when you are investing in real estate through an opportunity zone fund. And the first benefit, the reduction, if you invest in 2021 this year, and you have $1 million in capital gains, you will only have to pay capital gains on $900,000 of that. And that actually disappears after 12/31 of this year, and it goes down to zero. So the reduction is actually going to be short-lived here. It has been going on for the last 3 years and sort of stepping down from 15 to 10% until it gets to zero. And then the deferral is actually a nice benefit because if you have a capital gains obligation this year, you've realized capital gains, you have to pay taxes. If you invest in an opportunity zone fund, you actually don't have to recognize those gains until tax year 2026, payable in 2027. So it's actually like an interest-free loan from the government for 6 years or so. And then the big kicker to it is that if you are in the opportunity zone fund for 10 years and 1 day, no matter how much you make, if you invest $1 million and it grows to $2 million, $5 million, $10 million, $100 million, whatever it might be, you pay zero taxes when you get out. So it's one of the best programs to real estate, and for an already efficient asset class from a tax perspective, it makes it that much better. And when we run the math and we look at this and look at the after-tax returns of an opportunity zone investment versus using after-tax dollars, the benefit is about 60 to 70% greater in an opportunity zone. So if you like real estate and you're willing to take the ground-up development risk, there's really nothing better than you can invest in at this time than an opportunity zone fund.
Absolutely love those benefits. So again, the first one is to defer. You can defer your capital gains tax from a previous investment until 2026. And at the end of this year, the benefit goes down. Would you just clarify that again one more time to make sure I understood that?
Yeah, and I'll clarify one of the risks too, because the deferral means that you don't have to pay your capital gains this year. So you've got $1 million in capital gains on your tax statement, and you're going to have to pay that. If you invest that into a qualified opportunity zone fund, that gets kicked out. Now, the risk is that capital gains rates go up during that 2026, 2027 period. If they double, the flip side of that is that the forgiveness at 10 years and a day more than equalizes the added tax that you'll pay in 2026 or 27 if those taxes go out. So when you run the math, if you believe taxes are going up, there's actually a greater reason to invest in this fund. And so just taking on that example, $100 million this year, you would only recognize $900,000 of capital gains in 2026. So even if capital gains rates go up slightly or a lot, some of that is offset by the fact that you won't be recognizing $1 million. You'll only be recognizing $900,000 at that time period. But it's definitely some calculus that every investor should do, and understanding that during that time period, you're going to have a huge liability. And one of the ways that we are trying to solve for that within our fund is as we build these ground-up development projects, in about year 3 or 4, once we've created value, then we refinance the project and generally send back anywhere between 20 to 30 to even 40% of investors' equity to pay those tax obligations. And I should, just tell you, like, my partner and I are heavily invested in this fund. We have about $10 million between the two of us. So people, always, ask us the questions about this. In reality, we have these large tax obligations that we have to take care of. So it's in our best interest from both a manager perspective and an individual perspective to refinance these properties, get the money back as quickly as possible, because we're both on an IRR clock and we have a huge tax liability ourselves to pay.
Excellent. Yeah, thanks. That's a good summary.